Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business podcast. Today, we're going to take a look at a pitch deck, an investment deck. To help us do that is Katrina Glogowski. She's an angel investor and attorney in Seattle. Katrina, thanks for being back on the podcast.
Morning, Josh.
So we have our 7 guidelines, our regular tips to a successful investment deck. 1 being, do they identify the business plan goals? 2 is, do they know their audience? 3 is, do they understand the market? 4 is, have they identified needs and roadblocks? 5 is, do they know what sets the business apart? 6 is, did they introduce the team and product? And 7 is, did they create a summary?
I look forward to this one, Josh, and I want to disclose to all of our listeners that I understand that I know some of these people, and I think I've seen this pitch deck before. So, full disclosure.
All right. Disclosure received. So this investment deck is for a scalable online platform serving cannabis financial and business-to-business verticals, big data economics. They capitalize on massive projected global growth in the regulated cannabis industry. They have success in tech and early stage growth and see significant traction, like a 15x ROI. So this is interesting. They've got their ask like right in the first page here. So they're raising $350 at a $1.65 million pre-money valuation.
Okay, let's see what their valuation is based on.
Some of the highlights, they have 25,000 subscribers for an email. They have an advisory business, valuable cash flow generator.
I like that they have a mailing list of 150 accredited investors. That's good.
Yep, 150 accredited investors are good as long as they're writing checks. Looking at their homepage here, it says that they connect accredited investors with cannabis industry entrepreneurs via a single secure online platform. So this kind of sounds like a lending tree of cannabis where entrepreneurs and investors kind of meet and you look to find the best deal.
They've described the business model well.
So here's the opportunity. Talked about that explosive growth. So this kind of is maybe the total addressable market here.
Josh, do you know that the total addressable market in the cannabis industry is in the billions? Do you know that, Josh?
I've heard it's in the gabillions. Yeah. All right. So this company is serving 4 broad industry categories: the regulated cannabis industry with THC infused for recreation and medical, as well as CBD, beauty and skincare products, health and wellness, food and beverage, and then hemp with paper and textiles, biodegradable plastics, construction, health, food, and biofuel, and then the ancillary market for products and services.
Okay.
So they have a large, complex, and dynamic industry for plant touching, non-plant touching, all kinds of ideas.
Well, we've discussed this in the past, Josh. We know the breadth of the cannabis and cannabis-related business industry. It's nice to see it on a slide, but this is not news.
So this is how they're going to create value to all of those existing opportunities. They're going to drive engagement by investors and companies seeking funding with a robust free capability similar to LinkedIn or Facebook, LinkedIn, Slack, or Spotify, and allows them to capture and monetize data, site traffic, and upsell premium services. So they have a power of a freemium model. They're going to monetize traffic and data with deal services and sponsorships, email advertising, site ads, investor services, public companies, and recruiting and M&A.
Okay, I'm a little confused. What am I investing in? M&A, when a deal exits, we have an existing relationship with them, and intimate knowledge of their business, pipeline and thousands of prospects. Okay, are they going to be facilitating a deal, shepherdizing a deal, participating in a deal? Questions.
So how data becomes a valuable information, asking the questions, where in the industry today and what's the direction is it heading in? So they have the authoritative voice because they have proprietary data that no one else has access to. I think we're still waiting for what that is. So they have information that makes them experts worth listening to. Still waiting for that. And they have information that is increasing engagement with their company. So why would people use this platform? They're expecting rapid growth opportunities translating to huge demand for capital. Companies have to connect with investors in order to survive and grow, and access to this platform will provide information and deals for investor materials to increase the probability they're going to need for funding.
Okay.
Whole lot of elevator pitch lingo in every single one of these, but not really anything specific.
Well, it
So,
is a 30-page slide deck,
oh
so
shit.
maybe it's getting there.
Damn. We're only on page 11. Okay. So we're going to have to go. All right. So why companies need Spark? I think they already talked about that. There's a need for funding, right? So common problems are no institutional coverage and low trading volumes and limited liquidity.
This is a true statement. It's very hard for cannabis entrepreneurs to access capital markets. Very true.
And so services they provide, I think they already covered that in a few slides. So there's business to business advertising and marketing. So they have staffing and recruiting services, which is interesting, kind of outside the scope of this. So I think they're trying to just do a whole catch-all here. It's like the Walmart of cannabis here. Um,
Yeah,
I'm
they
not
just adding on services, don't they?
Yeah, so that's a curveball. They have staffing and recruiting services, as well as merger and acquisition services. So it's led by Wall Street and tech industry deal veteran.
Yeah, all investors want an exit.
So here's some of the history. They've had a $100,000 seed round in 2017. Then they had a first large M&A client, over 10 million in revenues in 2018. And then in 2019, pivoted to Spark with 50 deals, 125 accredited investors, and 25,000 cannabis email subscribers.
Okay.
So some of the developments, they have a new client, I guess, a new sponsor, Cohen Resnick. It's the 11th largest accounting firm, and they're going to focus on building out a platform capability and investment in marketing to drive revenue. They've got a strategic plan for the next couple of years.
I like that they have a plan. This is very, very important. They talk about an exit. That is very important. But I do want to point out that we are now on slide 20, and I'm not 100% sure what their product is. What am I investing in? Am I investing in them as shepherds to guide me through this process? Am I investing in other companies? Am I investing in a staffing and recruiting agency? We're 20 pages in, Josh, and I'm struggling to know what I'm going to be writing a check for.
I'm glad you brought that up because at slide 20, we're 2/3 of the way through this thing. They talk about an exit to your point, and I was assuming we were kind of getting to this lending tree, and then they start talking about all these services for recruiting, in M&A and all these other things. So I have no idea what this company is. They're kind of like all over the place. It's like how we make fun of a total addressable market slide. I feel like this whole deck is one of those.
Yeah, at least the TAM slide at least gives information.
So some of their comps are Gust, The Motley Fool, Morningstar, ArcView, New Canvas Ventures, Crunchbase, almost like a rating agency. I mean, if they're comparing themselves to Morningstar,
Yeah,
a
well,
news outlet for The Motley Fool, Rating Star with Morningstar, ArcView is kind of like a pitch investment company. New Canvas Ventures is media, Crunchbase is PR, and Gust is um, a place for entrepreneurs to get investment from angels.
well, the reason I hesitated there, Josh, was uh, again, I'm not really sure what I'm going to be writing a check for. So to address the adequacy or inadequacy of their comparables is difficult because I don't know what they're doing.
Yeah, none of these comparables are really comparables amongst each other. So it just kind of highlights how they're just not focused. They're really kind of all over the place. You could have a comp and just say we're the lending tree of cannabis and leave it at that. But I think this is just indicative of how they don't know what they are.
Or they're talking about the future where we hope to in the future add on staffing or add on M&A consultants. If that's the future, they miss the mark in explaining that to a potential investor.
So we've got an infographic here, kind of a little flywheel about growth and user engagement, leading to an increased value in their platform, sourcing clients for M&A and generating profits to the fund, leading to marketing and tech investment. They've got a financial summary from 2017 through 2024, looking to be profitable finally in 2021 with their pro forma projection.
Honestly, these look like real numbers. And it's nice to see a company that has revenue. Good on them. Good on them. 3 years in, and they actually have revenue. This is good. We don't often see this on the Talking Hedge.
And so towards the bottom here, slide 25, we have some of the team leaders. So they go into the co-founder and the CTO and a board advisor.
Yeah, meet the team. That's good. Oh, more team. Good.
More team. So it talks about some transaction details, pre-money valuation. We said it was they were trying to raise $350,000 for a pre-money valuation of 1.65. Minimum investment is $25,000.
So to our viewers, let's talk about a little bit about this slide for a minute. And investing in an LLC as opposed to a C corporation gives some investors pause because of the way an LLC is set up. They do indicate that they plan to convert when profitable, and that's good. I would say you should convert sooner rather than later. A lot of folks simply will not invest in an LLC given the corporate makeup of that. And of course, that's why they're selling membership units, because it's an LLC instead of shares in a traditional equity play. Second, $350,000 raise on a pre-money valuation of 1.65. If you were to write a check for $350,000 for these folks, LLC company, that's going to be a interesting equity split. And I would encourage individuals who write slide decks that we would analyze in the future to explain this out a little bit. Do I have preferred shares? Not preferred shares. Are these warrants? What's going on? Especially when you're dealing with an LLC and membership units, the traditional deal terms get a little muddied. And limited to accredited investors, most certainly. I mean, they're trying to comply with the SEC there. But for our viewers and our listeners, when you start talking about the terms of the deal, make sure that the terms are clear and not muddied. Otherwise, an investor's not going to write a check.
Maybe one of the most common forms I've seen a setup is a C Corp. Even though an S Corp is more advantageous for the members, C Corp is more favorable to the investors, generally speaking. And then if you have individual entities, whether those are LLCs or otherwise, those investors own the whole umbrella. So it's I got to take a look at it. Otherwise, it's $10,000 out of pocket to change that, but not the end of the world.
Yep, that's my solid advice to them.
All right. Slide 28, they've got an exit strategy, $4 million. They want to exit, projected 5 years, but what I saw, their exit was for 2022. So that's 18 months from now. And this is their first year they're supposed to be profitable. So they want to have high margins, rapid growth, and non-plant touching services.
It'll be interesting. The thing that they're looking at their comparables here without ArcView and Bespoke. Are they a fund? I'm still confused. And we're on slide 28.
Right. Yeah. If that's their exit strategy, why wouldn't they sell themselves to Facebook and all those other people that they were comparing themselves to early on? So they've had 3 different sets of comps. They had a tech comp, and then, a Morningstar comp, and then now Bespoke comp. So again, not sure they know who they are. They got a cap table, Harris Northwest, Jaguaring, and then other investors.
Isn't that 100%?
Yeah. So it looks like only 11% are outside, so they'd have to split that up somehow for new investors.
Well, Josh, 30 slides, we're done. Why don't you tell me what Pacific Growth Capital does?
So if I had to guess what Pacific Growth Capital does, I'm assuming that they are some kind of advisory. So they're going to be, I guess like not a broker dealer, but an advisor. So they're not selling other people's shares, they're just advising them. I guess they're trying to get other people, like a feeder fund. And I don't think they know what they are.
I would agree with you, Josh. I do think that they're trying to be one size fits all for a variety of different purposes. And I walk away from this pitch deck thinking that they are some type of advisor or consultancy. Uh, and I would not my own self invest money in an advisor or a consultancy service. I did not really see them have a product. So if we get to our 7 tips to a successful investment pitch deck, did they identify the planned goals? Josh, the goals that I saw them identify was give me money and I will make money for you.
Right. I mean, the goal, the only thing I'm pretty certain of is that they want to exit quickly.
Yeah.
And they have all of these plans and all of these things and all of this opportunity, and they want it all. But I'm not sure what they are, where they want to go, what they want to do. So I don't know what their goals are except to exit from what they want to do in 2 years. So I don't think they identified the business plan goals.
Right.
In terms of knowing the audience, I think they know the investor audience because they're trying to be that themselves. So I think they understand the need for distressed assets and, on the investments, on the lending side as well as on the borrowing side, regular entrepreneurs in a depressed market needing access to cash without traditional banking services, and then the economic collapse on top of that. Yeah, this needs, people need this service. So I think they do know their audience.
I agree. I think that they have identified the fact that cannabis companies need help. That's very true. And they certainly used the buzzwords that investors like to see. Maybe not the buzzwords in the correct order, but they definitely use the buzzwords that we like to see. So I actually would give them a point for that.
I'd give them another point for understanding the market. I think that they know what borrowers and entrepreneurs, what lenders and entrepreneurs need and want. I think they understand where the marketplace is at. I don't think they know what they want, but they understand that there are opportunities, and they're just throwing this fish net out there trying to grab onto something.
Agreed.
Identifying needs and roadblocks. They didn't mention the economy. They didn't mention, illiquid assets. They didn't mention any roadblocks whatsoever. They mentioned that they need some funding, but they were all over the place. So I'm not even sure I can give them partial credit.
I think that they did not meet this requirement in part because I don't understand what their product is. If they are a consultancy advisory type firm, then they didn't identify any of the regulatory hurdles that advisors and folks consultancies need to have if they are selling some type of fund, like give me your money and we'll make money for you and write you a check in 2022. They certainly didn't identify the requirements of that. If they are going to be a staffing service, they didn't identify how they're going to handle that. And if they're an actual product company, we saw one reference to beauty products. What about CBD regulations and THC regulations that vary state by state and federally are very questionable? So again, my lack of understanding as to what they're doing might inform the fact that I fail to give them a point for number 4.
I can't either. Knowing what sets the business apart, I think just the fact that they didn't have that financial roadblock means that they haven't made number 5 either. By knowing what sets them apart, they should have said something like, there's some serious economic contraction right now. You need this service because the traditional lending landscape is freezing right now, and there's not the liquidity that's necessary. So I don't think that they know what sets them apart. There were so many different pieces to this anyways that they weren't even coherent.
Agreed. And also, their failure to narrow down onto what a product is, which does sort of spill over into number 6, but their failure to identify what their product is also, they're doomed to fail for number 5. If you don't know what your product is, how can you set your business apart? If they're just going to be pooling resources and funding cannabis companies, there's other people that do that, and they've been around a lot longer. And so what sets your business apart from them? Again, if you're a health and beauty product, what sets your business apart? If you're an advertising platform, how are you going to compete with Leafly? You just, their failure to narrow down what their product is creates a problem for both 5 and 6, Josh.
Yeah, I mean, they introduced the team for number 6, and then, the product was described. I'm not entirely sure, maybe I can give them a half for at least the team. I mean, the product was the brand, and the brand is all over the place. They're everything. So I'm not entirely sure what the product is. And then creating a summary, I think I can give them half a point for that, because they did at a couple different points describe what they were asking for and what the pre-money valuation was. Still not entirely sure what that encompasses. If they have licenses, property, plant, and equipment, what all are they asking for? I'm not entirely sure. I know that what they're asking, but I don't know what it all entails.
I agree with your half a point for number 7. Creating a summary. We always like to see exits. Investors want their money back, absolutely. And they talk about who would possibly acquire them. These are all good things, and so I'm going to give them a half a point. But the overarching failure to identify what their product actually is greatly troubling.
All right. Well, I think that's about 3 out of 7 leaves for this pitch deck review.
I do think the deck is fixable if they just say, hey, our product is a platform. Our product is a staffing agency. Our product is health and beauty. They can fix this deck, and they can always say potential growth areas in the future as we get the funding needs, or as we grow, we're going to go into X, Y, and Z. But the deck as it sits now is problematic.
Mm-hmm. All right. I think we're going to leave it right there. With that, we're going to roll this one up. I want to thank my guests, Katrina Glogowski, angel investor and attorney in Seattle. Thanks for being back with us.
Thanks, Josh.
I am Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.